Dr. Tirthankar Patnaik is with us. Dr. Patnaik, thanks very much for coming on. Great to have you with us here. Your first take, I'm sure you've been sort of looking and hearing these Infosys. Okay, I think we have the guidance. Dr. Patnaik, I'm just coming to you. 7 to 9% guidance is what Infosys is saying. They'll grow the dollar revenues for fiscal 15 by 7 to 9%. So now I think officially we can say that these numbers are definitely better than what Street expected. 50% growth in EBIT margins compared to 6 to 8% expectation. Guidance, dollar revenue growth guidance is 7 to 9%. And let's just stick with this graphic. 7 to 9% dollar revenue growth for fiscal 15 is what Infosys is saying. And Q4 has largely been all in line with what was expected. 6 to 8. 6 to 8 was the expected. 7 to 9 is what they're saying they'll be able to do. As I was saying in the morning, under 8 would have been bad news. But they've not only increased the lower end of the guidance, but also the upper end of the guidance. So from 6 to 8, 6 has moved to 8, 8 has moved to 9. 6 has moved to 7 and 8 has moved to 9. So that's basically what has happened from Infosys. Dr. Patnaik, over to you. Your assessment.
See, our analyst expectations have been exactly met, I'm glad to say. 7 to 9% guidance for FY15 was the key figure that we were looking for. And I'm happy to say that the numbers have come in, that the guidance has come in from the management at exactly those levels, 7 to 9%, for Infi for FY15. That's the dollar revenue guidance. And we think we continue to like Infi as a stock. And if there was some margin of disappointment in terms of what the management had put out earlier about muted guidance this time, we are happy to say that's not happening this time. So, we have an overweight on Infosys, and these numbers are, certainly in line.
What's your sense on the stock?
See, we have a buy rating. We believe that the stock still has upside. At the moment, what is happening across the markets is that there is a rotation towards the beta side of the portfolio. Therefore, banking, infra, all the domestic economies, sectors have been doing better. And given that capital inflows have been fairly low, not on the foreign side, but on the domestic side, we've seen some amount of sector rotation. But most large foreign portfolios are still overweight IT and pharma, and we believe that these numbers are therefore a good sign that there should be good growth. There is good growth even in IT and pharma. It's being just masked by what's happening better in terms of valuations on the beta side of the sectors. So our portfolio again is overweight IT and pharma, and that's essentially what we are keeping right now.
Tirthankar, so other tech stocks are also jumping up. From a pure trading perspective, near to medium term, is there anything one can do here with these kind of with this kind of price action?
See, what we've been advising clients is that the INR is actually strengthening. So, this is more of a case, as our analysts, has always put out, that large cap over mid caps for now from a trading opportunity. And certainly after Infi's results today, the bar has been set higher for all the rest of the, big four also. Our expectations had been that TCS should do about 3.2%, Wipro should also, HCLT should also do about 3% dollar volume growth. And therefore, we could expect some amount of, positive surprise even there. And in terms of, sector positioning right now, what we've been telling clients is that as the INR strengthens, this is a good opportunity to, build up more positions into IT stocks. We do not believe the INR will strengthen very meaningfully from current levels. Our band remains 58 to 62 over the, near to medium term. And as therefore the INR strengthens, there could be some weakness in IT space, and that will be a good time to sort of, enter into the build up positions into the, into the IT services game. But clearly, after the Infi results this time, we expect the bar has been raised for the rest of the IT space.
What's your top pick in the space, Tirthankar?
Well, Infi and TCS, they remain our topics at this point.
What do you think happens with United Spirits just to move tracks with the new open offer?
Well, certainly the short answer is there's a much higher probability of the open offer basically going through. They have been fairly generous with their offer of 30-30, and one would expect that the open offer to actually finally go through this time. So clearly a good sign for this particular merger this time.
Yeah. So you think people will actually tender this time, right? I mean, that's basically the expectation. This is coming at a time when
Yes,
the court case,
definitely.
etc.,
Yeah, exactly.
filed by lenders is still going on, right? So that got some amount of that worried people for a while, but they're basically committing another 1.7, 1.8 billion dollars in this open offer, even though that all that is going on in the backdrop. So what does that tell you? Not very worried about those things, right?
My only read is that market prices react to incremental information, and the litigation is definitely on. It's not likely to settle down in a hurry. Lender litigation is the leverage problems for the company will basically remain. However, what will happen is that given that this is a fairly generous offer, I believe shareholders have a fair chance to participate in it.